Welcome to the Day Trading for Beginners podcast. This is season 3, episode 11. And in this episode, we're talking trading psychology. So specifically, we're going to talk about a quote from a book that I would recommend you consider downloading as an audiobook or buying the book. It's talking about mirrors in the market. So I came across a recommendation in our school group. So if you've not joined our school group, you can find a link in the show notes, or you can go to school.com/trading. In that group, we've got a lot of members now that are actually putting on trades. They're paper trading, some are trading with real money, and they're following the strategy that I've been using while I've been documenting my real trades that I started back in April 2025. So some people are up and running and they're trading in weeks. So I would highly recommend you go and check out the group. If you're not a member yet, the course is still currently free. So I would recommend that you jump on board and get grandfathered in so you always have access to that course. Now, one member mentioned this in a discussion we had, and they mentioned a quote from this book, and it really inspired me to create this trading psychology podcast here. So if you have been trading for a little bit, you're honing up on your trading skills, looking at charts and indicators, but you might still catch yourself hesitating or chasing trades or exiting too soon, whether you're paper trading or you are actually trading real money. And most traders agree that, the technical know-how isn't enough. So you can have a great strategy, but your mind is going to hold you back from making that strategy work. And that is what the author Jared Tendler talks about in his book, The Mental Game of Trading. And I actually have this as an audiobook, and I believe I listened to parts of it a long time ago when I was first starting this journey. And then this post or this recommendation in our school group it got me back on, and I've been starting to listen to it again. And there's a key quote in the book, and I'm sort of paraphrasing it here, but it says, "The charts are a mirror that reflects your inner self." So the price chart is a mirror that reflects your inner self. And we're going to cover Tendler's approach and explore this quote's meaning, and maybe even give a few examples as well. So the author here, Jared Tendler, from The Mental Game of Trading, he's a top mental performance coach, and he's helped elite performers in various fields like poker, golf, and trading. And he's drawing from his own struggles as a competitive golfer. And if you know anything about golf or you play, you know how big the mental game is for golf. And he sort of developed a system to build what he called sort of mental resilience. So now he applies those methods to the world of trading. And, the book sort of tackles some of the trading mistakes that everyone tends to make, chasing, over trading, and he kind of frames them as psychological mistakes and issues, not technical issues. So he pinpoints emotions like greed, fear, and anger as root causes, and he offers a practical system. He sort of maps out emotional patterns, identifies triggers, and then uses tools like journaling and visualization to correct them. Unlike sort of some vague advice that you might get, like don't trade with emotions or focus on risk management. And, statements like that, they don't really, people can't take action with them. Here, he sort of has an approach where he treats the emotions as data, and he helps traders turn flaws into strength. So if you're interested in more of the technical side and really getting like a mapped out plan about how you can sort of help the mental side of trading, then you might want to go and pick up the book. Now, this quote really kind of hit home for me when it says, "The charts are a mirror of your inner self." And it really captures the author's philosophy. So the charts, trading charts, with their lines, you've got price action, we've got the candlesticks, we've got volume indicators, and we've got various other indicators. They show raw data. They show factual information, numbers and patterns that reflect what's happening in the market, like how much a stock or an asset's price has moved, or how many shares were traded that day, or signals from indicators and tools like a moving average. So this is objective data, meaning it's measurable, it's verifiable, and it's the same for everyone who's looking at it. It's free from personal opinions or feelings. Yet, how you interpret these charts, whether you see an opportunity or a fear of loss, or you feel pressured to act, that reveals your internal world, like your emotions, your biases, or your mental blocks, as Jared highlights in his book. So, think of objective data as the hard facts on a chart. So the price is, say, $50 and the trend is bullish. But your reaction, whether it's panic, excitement, or hesitation, it shows what's going on inside you, which can shape your trading decisions more than the data itself. So the market doesn't care about your emotions, but your emotions color the market. So a fearful trader might see a minor pullback as like a crash signal, selling prematurely. A greedy one might ignore some warning signs in a rising trend, holding maybe for too long. So the chart remains the same. It's your inner self, it's your biases, your past traumas, or your unchecked impulses that distorts the reflection. So again, the charts show hard facts, prices, volumes, trends, but your repeated mistakes like overtrading, they aren't the chart's faults. They reflect your inner chaos, like, a lack of discipline. So by seeing this, you can start to use charts not just to analyze the markets, but also reflect on yourself, turning losses into lessons. So I've mentioned this a lot in our school group that, you can't teach experience, and we can list a whole bunch of mistakes that beginners make, but you actually have to get out and trade and make those mistakes and then reflect on them and then be aware of what you're doing and journal it. And then the next time you come into those situations, you might be able to, stop yourself before you keep making those mistakes. And many of the members in our group, they've started trading in a short amount of time, and they're already documenting some of these emotions that they're getting from actually paper trading with the strategy that we talk about in our school group. So again, I'd highly recommend that you join that group. So just some, we'll call that real world examples here we can talk through. So if you consider a trader, during a volatile market session, the chart shows a breakout pattern, but maybe past losses trigger fear and it leads to some hesitation. So the opportunity passes and the frustration builds up. That's a classic tilt. So if you play poker, when someone's on tilt, they're sort of rattled. Well, the author Tendler, his system would have that trader journal this, what emotion arose? What's the root cause? Is there any sort of unresolved fear from a big drawdown in the past? And then you kind of correct it with some pre-trade routines in order to build some confidence. So again, the book goes into great detail on how to actually fix some of these problems. So another example might be something like an institutional trader spots, a certain pattern, like a head and shoulders pattern, a signaling of reversal, but overconfidence, maybe from some recent wins, leads to an oversized position, amplifying losses when, it doesn't turn out. So here the chart reflects overconfidence. So applying the quote, the trader reflects, my inner self is seeking validation through wins, not the strategy on hand. So in order to apply this, just some 4 quick bullet points here that might help you kind of apply this in your own trading is to write down your feelings. So after a trade, maybe just jot down how the chart made you feel. Were you stressed? Were you excited? And compare it to what the chart actually showed. So the price or the volume. And this is a really good one because you should stop and think and journal your trades. You can make a trade, and even if you're just beginning and you make a trade as a beginner in a paper trading account, you're going to have some sort of emotions. You're going to feel a rush of excitement, panic, or the fear of missing out. So get into the habit of just at least being aware of those and writing them down, journaling them would be the best thing for you to do. And then you might be able to spot some emotional triggers. So maybe notice what chart patterns, like a sudden drop, spark some emotions like fear or greed. So a lot of people, when they see a breakout, so they're checking the charts and, a stock's up 5%. I even know from my personal experience, still, and in the past, you get that fear of missing out. You're like, why? I wish I was in this position. Maybe I'll jump in now and it'll go up another 5%. And I can, make 5% off a big trade. Maybe I'll put a few $1,000s on the stock now because it's up 5% and it's only 10 a.m. and it's going to rise up another 5%. Easy money. Those things, if you're starting to feel those, it's great to journal those as well. Stay calm with visualization. So picture charts just as neutral tools, like a mirror, not something to fear or not something to fight. and try and find emotional balance. So, don't overtrade, don't be overconfident or doubt certain situations, and work on keeping your mindset very steady, calm, and patient. So those would be like 4 easy things that you can do. And these can kind of help you turn emotions into useful insights, which will make you into a better trader. So just to wrap up here, the book, The Mental Game of Trading, certainly consider getting it. It's a game changer for anyone tired of emotional sabotage and wants like a really clear action plan to sort of fix this. That quote there, it talks about charts as mirrors. It reminds us that trading success, it starts inward. So by confronting your reflections, whether it's greed, fear, or doubt, you really unlock consistent performance. So whether you're a beginner or you have some experience trading, I think the tools from that book can offer a path to psychological edge. And anytime you can get a bit of an edge in the trading game is definitely useful. So again, I would recommend that you join our school community. You can stay accountable in that group. You can share your trades and emotions. You can access our courses, which highlight more of the mental game there. There's a low stress trading strategy in the course right now. It helps you reduce errors. It's a clear path for beginners to build confidence and achieve success with trading. So again, I'd highly recommend you go and check that out because currently it is still available for free. So you can visit school.com/trading to join for free. That's SKOOL.com/trading. So I really look forward to chatting with you in our group if you're not a member yet. And I hope that you found this useful. And in the next episode, we are going to recap for the month of September, and that'll be 6 months into my trading journey, trading real money, and the results are looking quite good. So I'm excited to share that in the next episode.